My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to save you some money. My job is not just to entertain, but to educate and explain. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Sometimes everything seems to go wrong, and it makes you just want to throw in the towel, doesn't it? But after a day like today, where the averages started really strong, then collapsed, then rebounded, then pulled back again, Dow ultimately declining 46 points, S&P sinking 0.58%, and the Nasdaq losing 1.15%. I'd argue at this point, maybe after such a sell-off, that it's better you just kind of hold on. Maybe you just hold on for a couple of percentage point decline, and then we'll be so oversold we can reverse again. After all, we did bounce intraday, if only for a 20-year Treasury auction that went much better than feared. While the rebound was indeed short-lived, it did give you a better chance to sell than at the lows, although there were better moments to sell at the beginning of the day when it looked like the market was going to skyrocket. It's exhausting. But tonight I want to put myself in the shoes of the seller, okay? The one who's really in control right now, not the ones who sold at the bottom, forget them, but the ones who held on and got back to even, at least for this session. I will never, ever fight any viewer who wants to just dump all the stock. It's not my style to fight, but it's also not my style to do that. However, not many things are working. And we've had a huge run. It's natural to ring the register, isn't it? Nobody wants to turn a profit into a loss. Plus, the stock market's ignoring anything positive about companies that report upside surprises while staying laser-focused on the negatives. J.B. Hunt, big trucking company, number 4, reported numbers that were disappointing by its own admission. Stock dropped 8%. Same with Prologis, the biggest warehouse company in the country. That saw its stock plunge more than 7% today on what I thought was a shocking lowered forecast. These two companies used to generate impressive growth. Now they're offering subpar numbers. Worse, they were quoted very loudly not that long ago about how well they were doing, especially Prologis on our own show just last month. Neither saw this weakness coming. I was very, very disappointed in this. We also had plenty of big-picture negatives. Long-term interest rates are rising. Commodity prices are rising. Oil is soaring. Europe's very soft. The Middle East is close to the brink after Iran fired missiles at Israel. The past few sessions have been rough. But today, let's see, oil plummeted, broader commodity complex got hit. Europe's looking a little brighter. Israeli government seems to be leaning toward restraint. Yet those positives only seem to matter for about an hour. Hey, you get some green shoots, and the bear just savages them with a sickle. Doesn't it make you want to give up? It does, especially when the Nasdaq seems to be breaking down really badly after a magnificent run. Oh, and let's not forget that you can get 5% for just sticking your money in a certificate of deposit. Wow, days like today, doesn't it feel good? Look, this is a market that wants to go down, as I used to say at my old hedge fund. It's very easy to say the valuations are stretched. We hear that all day. It's easy to convince yourself that when the bellwethers like Apple or Tesla or Nvidia roll over, and boy, are they rolling over, that nothing else can work. So you just get out of Dodge. But is that really a good reason to just sell everything? No. And you never sell all at once, even if you think it's time to go. For the Charitable Trust, we did something different. We sold stock at almost every day in the last 4 weeks, something I guess you would have known if you joined the CNBC Investing Club. We did think some valuations were momentarily overstretched, and not after the decline. We didn't want to lose all of our positions, so we did something called scaling out, meaning as the stock went higher, we sold some shares to raise some cash. If it ever comes back down, we can always use that cash to scale back in. We figured the market might have a short-term peak because the Fed may have jumped the gun when they told us they no longer needed to raise rates. We've been very skeptical of the Fed's dot plots, calling for 3 rate cuts this year. I mean, no central banker cuts rates quickly when unemployment is below 4%, for heaven's sake, and we start getting overheated inflation numbers. And that's why we were adamant that there could be no rate cuts until we saw some weaker economic numbers. Somewhere, anywhere. I also recognize that this is an aggravating tape. But get this. When I saw Abbott Labs put up terrific numbers this morning, raising the low end of the forecast, only for its stock to just get annihilated, well, I know this market's gotten too negative. We bought some Abbott today for the trust. We're going to keep buying into weakness gradually. Abbott's numbers were actually terrific. Nobody even bothered to listen. Nevertheless, let me do this. Let me go over what's really ailing this market and what might cause it to keep going down, because that's a very real possibility, people. First, you know what? Investors aren't buying the dips here. We get any rally and sellers come out of the woodwork and blast any buyers. This change in tactics is what's killing the Nasdaq. That's why it couldn't maintain any advance today. Who buys a dip knowing that your head might be blown off it after a percent or two gain? Second, many stocks have had parabolic moves. I've talked to you about that nightly. They've rallied practically straight up, like a parabola. When you see these, you should remember high school algebra, because parabolas go right back down just as fast. That's what's happening. We're now reversing the parabola, and we're now going down. When that happens, stocks then shift to what's known as a head and shoulders pattern, with the head being at the top of the parabola. So many names have made that bearish pattern in the last few days, where you just need to wait until the stock stops going down. Don't worry. It's not hard to tell. If the stock's way down from the highs and you've already sold some at higher levels, you got my blessing to start buying them back at a lower level, but not more than that. Why not buy more? Because thirdly, this market is not yet oversold given from where we're coming from. In the Investing Club, we take advantage of the special deal we have with this market edge to get the S&P oscillator every day, right after 4 p.m. And I don't want to get aggressive at the buy until we get an oscillator that reads -7, which means that there's really a huge amount of selling pressure. It hit -6 and change today. I got to wait till 7. That's not enough to cure the ugliness, even as this is now the longest downturn since January. Fourth, I was concerned that many people were clinging to the hope of rate cuts that are unimaginable in a world where there's so much economic activity and so few workers. There's an incredible amount of business formation. There are more and more mergers and IPOs. None of that's what you want to see when the Fed's trying to cool down the economy. I think Chairman Powell was willing to cut rates when we got some weak numbers, but these recent numbers are way too high. It resets the clock on potential rate cuts. We need to see at least 2 months of cooler numbers before the Fed even considers cutting. Right now, there is no sign in this economy of any slowdown other than Prologis and J.B. Hunt. Finally, the market tells you when the endless selling has finally come to an end. Usually you get a day when the market starts down, not up like it did today, down big. Therefore, it gives you a chance to get in after the washout. You get a whoosh. You get a crescendo of selling. An upstart like we had today is a nightmare. You need to wash out all these people before you can bottom. And we're not near that yet. Do you think all the sellers of Tesla are done now that there's a chance to amend Elon Musk's salary package while the company's reportedly delayed Cybertruck deliveries without explanation? Do you think all the sellers in NVIDIA are done now that everyone's convinced that Amazon, Alphabet, and Meta are producing competing chips, even as they said over and over again, that's not the case? It's like my interview with CEO Jensen Huang from NVIDIA explaining all this never happened. Hey, can Apple really bottom when every day we get this tortured number cut? So here's the bottom line. If you want to get out, go ahead. But I would say that the time to sell was when the market was going parabolic. Time to buy is when the parabola finishes, comes down dramatically. We don't know when that moment will come yet. But at this point, you sure aren't buying at the top, are you? And you are more likely coming in near the end of the great parabola. How about we go to Tyler in California to start? Tyler.
Hey, Big Booyah from California. How you doing, Jim?
I'm doing well. How about you?
I'm doing good. Thanks for asking. I bought this IPO at $51 per share, and I wish I had just bought more, but at the same time, I like my average being 51. I'm diamond handing ARM. What's your take on averaging up?
You know, we talked about ARM today in the office, and all of us said the same thing. What a great company. But where the heck should it be worth now that it had gone parabolic to all the way up to the mid-100s and now come back down? And the consensus was that it might go down into the 80s. And that is where we would feel comfortable owning or buying some. Remember, great company. Renee Haas doing a great job. But the market's changed its complexion. Let's go to Georgie in Pennsylvania. Georgie.
Hi, Jim. Joining your club was one of the best investments I've made. I can't thank you enough for all your help.
Thank you. We are really digging in. I took some time off my vacation because I did not want to leave Jeff Marks alone in this sell-off, and we just hope we don't let you down. How can I help you now?
You certainly have not. I had planned to add shares of Palo Alto on pullback, both in my portfolio and for grandchildren accounts. Should I reconsider due to the class action lawsuit?
No. As a matter of fact, we got our first note, which indicates that things are going better than expected at Palo Alto. And analysts said, you know what? We think, though, that some of the worst may be behind them. Why that is? They were brought in by United Health's division that was hacked. And they are the single source of truth for United Health. If they were doing so badly, why would they get the single best contract of the year when it comes to cyber terrorism? Let's go to Sonny in Illinois. Sonny.
Hey, Jim, a big sunny booyah to you, my friend from Illinois.
I'll take it. What's happening?
Hey, I just want to start off by giving a shout to your staff, Nicole, and everybody there. They are phenomenal, my friend.
They are the best, and they make people feel good because they're polite and they're kind, and that's what I want to see from people at this point in my career. We have nice people here, and I just think that's terrific. How can I help?
And so are you. You're nice people, too, my friend.
If I get upset. But, I'm pretty good normally. I'm a perfectionist. I'm a perfectionist. I mean, I tell my wife, I said, listen, I can't stay with you tonight. I got to work. I mean, that's the way I felt last night. It was not well received. It's okay.
Yeah, exactly. Speaking of wives, my wife, Amal, my son, Jimmy, and my son, Zachary, are huge fans of you and your show.
Thank you.
And last but not least, wanted to give a shout out to your morning show with Carl and David. You guys do a phenomenal job in the morning. I love those guys.
And by the way, David is my friend. He doesn't seem like it. I get that.
Yeah, I was wondering. Sometimes you guys get a little rough on each other there in the morning, but that's all for fun, right?
Yeah, a lot of times.
All right, Jim. Well, let's get down to business, man. I'm a longtime fan, investment club member, and a fan of your book.
Thank you.
Yeah, so I know you love Ford. I know you love Farley. I know you own it for your charitable trust. Ford's come down about maybe 10 to 15% off its recent high, and it's sitting around 12, almost near its 200-day moving average. Now, Mr. Farley's going to be reporting earnings next week. Can you tell me, the investment club members and all your fans, and stare at that TV screen and push that button, buy ahead of the earnings?
Right. Well, look, I have to tell you, this stock has everything you said is nice. Thank you for saying that stuff about the staff. I will tell you this. This stock has come down a great deal, as you said, in the last few weeks, and I would buy it ahead of the quarter. The ones that are 5-6 times earnings, like United Airlines, look how well they did. Ford's like that. I think the time to sell out of this market was when it was going parabolic, and now we're well past that. We don't know when the moment will come to buy. I admit that. But I just know this. You aren't buying this market at the top anymore if you come in and start doing some purchasing mad money tonight. Earnings season has begun with the big banks kicking things off late last week, and I am taking the big six head on, giving you my take, and boy, is there a lot to learn. Then from big banks to regionals, I'm checking them with a Tennessee bank called First Horizon, 160 years, to see how they're doing. And I got a bone to pick with the way we handle antitrust in this country, and I'm laying all the reasons out why I think maybe it needs to change. It's a little anti-business. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.